From budget day, capital gains tax on almost all assets is 18% for basic rate taxpayers and 24% for higher rate taxpayers. The previous rates were 10% and 20%. A change to the rate of tax partway through the tax year is unusual and will inevitably mean taxpayers need to take more care when declaring gains on their tax returns to 5 April 2025 to account for this rate shift, particularly where individuals have portfolio of shares with multiple disposals throughout the tax year. For private equity individuals, the rate of CGT on carried interest increases from April 2025. The 18% and 28% rate will become a flat rate of 32%. A reform of the carried interest rules has been proposed and we expect the CGT regime to be abolished, replaced by tax at income tax rates, although there will be reductions in certain circumstances. Business asset disposal relief, which is a 10% rate of tax available on the disposal of qualifying shares and business interests, increases to 14% in 25-26 and 18% in 26-27. The amount of gain qualifying for this rate of CGT continues to be 1 million, and that is the lifetime limit. Investors' relief, which also applies a reduced rate of CGT to unlisted shares where an individual is not an employee subject to other conditions, also has the rate increased to be aligned with business asset disposal relief. The lifetime limit is also reduced from 10 million to 1 million from budget day. The conditions to qualify for business asset disposal relief or investors' relief were unchanged at the budget. The 10% rate of CGT is still available on disposals until 5 April 2025, although if your gain exceeds the lifetime limit, you will be subject to the increased main rate of 24% rather than the previous 20%. There are various anti-forestalling measures in place to put a stop to people entering into contracts to sell assets which are not completed until a later tax year in order to access the lower rates of CGT, so care needs exercised in any transaction you are undertaking. In addition, where the proceeds for the sale of your business is not entirely cash and there is a paper element, usually shares in the acquiring company, normally the element of the non-cash proceeds is not taxable as a rollover relief is available. For transactions qualifying for business asset disposal relief or investors' relief, it can be beneficial to elect out of those rollover provisions and utilise the lower rate of CGT, particularly where the shares acquired will not qualify on a later transaction. This requires an election, and the budget brought in rules which broadly means the date of the election, rather than the date of the transaction, drives the applicable tax rate. For example, a transaction between budget day and 5 April 2025 will need to have the election submitted by 5 April 2025 in order to benefit from the 10% rate. An election made after 5 April 2025 means the 14% rate of CGT will apply. There have been no other changes to CGT, and the benefit of the CGT base cost uplift on death, holdover and other rollover reliefs continue as before. There had been some concern that these would be withdrawn at the budget. Take advice and make sure you are aware of the CGT liability before you enter into any transaction. If you think you are impacted by any of the changes or would like to talk through capital gains tax generally, come and talk to AEB. We are absolutely dedicated to helping you achieve your goals.